Hi, this is Dr. Kerry Johnson. I'm the author of 7 books, including my newest one, Behavioral Investing: Why Smart People Make Dumb Mistakes with Their Money. I'm also a student with iLearniTrade. Welcome to iLearniTrade's presentation on investing in the 21st century. Before we get started, I'd like to remind you that everything we present is educational in nature and should not be taken as personal financial advice. But you need to know how to actively manage your money, now more than ever before. You know, gone are the days when you could just buy stock and watch it grow. Back in the 80s and the 90s, the U.S. went through a period of swift economic growth based on domestic demand and also consumption. International trade was picking up, but the U.S. was relatively insulated from activity overseas. Consequently, it was a time of massive wealth generation for investors. You could have bought stocks of companies doing well and just sat back. It's interesting to note that the Dow Jones Industrial Average grew threefold during the 1980s and further fourfold in the 90s. And that was a 12-fold growth rate over a period of 2 decades, a staggering return by any standard. But with the turn of the century, the technology bubble popped and markets entered an era of uncertainty. Since then, we have seen one recession and one near depression. The 12 years that followed saw periods of euphoria and steep market drops. Overall, the markets were around the same level they were in the year 2000. In fact, the tech-centric NASDAQ that started it all is still languishing at around half its peak value. Have you relied on the stocks that you purchased to produce big gains? If you did, all you would have bought yourself was a decade-long emotional roller coaster and not made any significant money. Back in 2009 of March, the markets had lost more than half their value. Life savings were literally wiped out. Perhaps you decided to ride the wave because you felt it was too late to do anything, or you had genuine faith that things would improve. Well, luckily the market did improve, but 3 years on, we are still struggling. In 2010, everyone was feeling better that we were coming out of a crisis and condoned the fact that the markets were having a bumpy year. Big swings up and big swings down. But by 2011, the economic recovery was well underway, wasn't it? So the market should have settled to some sort of normalcy. Well, guess what? The markets were far more volatile with 13 sessions greater than 7%. 2012 has not been much different. The markets started off with a terrific 7% rise in the Dow Jones Industrial Average. Does the market look set to get to the normalcy we saw in the 90s? No. The bumps are ready to set in. In fact, it's time to accept this high volatility is the new normal and adapt to it. Unlike the 80s and 90s, the world was a far smaller place, tight-knit in trade and economics. There's little doubt that the U.S. is still the world leader. But we were affected by events all over. Concerns over Greece's inability to pay its government bonds set the U.S. market into a tailspin last year. The unfortunate tsunami in Japan had an impact on U.S. trade and hit the markets in early 2010. And policy changes from China and European banks brought gyrations to the U.S. dollar. Yeah, economic growth will pick up in the years to come. But to get the return you got back in the 80s and the 90s, the Dow has to cross, listen to this, a mind-boggling figure of 150,000 by 2032. So if you still go with the age-old approach of buying stock, the only way you'll make money is if it goes up. For the large part, it hasn't worked for the last 12 years. You need to learn the new but proven tools that are essential to make money in the market. This is the only way to ensure good financial health. One of the safest strategies is the iron condor. An iron condor is created by trading 4 option contracts simultaneously, 2 of them above the current market and 2 below. Once you're in this trade, the market can either go up, go down, or stay sideways. As long as it remains within the range of your condor, you'll make money. This significantly improves your probability of successfully making returns. Now, the minute you hear about trading options, you may react by saying, there's no way, it's way too dangerous. You have probably heard horror stories from friends who dabbled in options that got burnt. Well, that would have happened for one of two reasons. Insufficient knowledge on how to use these tools of leverage can lead to losses. But the bigger reason is greed. The minute one hears about heavy leverage, one starts salivating and looks for multi-fold returns in short periods of time, a recipe for disaster. When completely understood and traded with discipline, options are far safer than trading stocks. This is the reason why large, successful hedge funds are the biggest traders of options. You can limit your exposure and minimize losses. Option contracts have unique gauges that are not applicable to stocks, that you can monitor to see how your trade is doing or is expected to do. Here's a simple option chain. Some of the parameters that you can monitor are probability in the money, that quantifies the possibility of the stock or index reaching your option price. The delta tells you how your option is going to be affected by a 1-point move in the stock or the index. And theta gives you the impact of the passage of time on your option price. There are many more indicators that you can use to monitor option trades. When they trade iron condors, or when iLearniTrade trades iron condors, they generally trade directly on the index and not on individual stocks. Why? Well, three reasons. First, the index is diversified. The S&P 500 is composed of the top 500 companies in the U.S. trading index. That means you're invested in the collective performance of all 500 companies. Second, it gives you better risk management as you're insulated from sudden price fluctuations of a single stock. And finally, higher predictability. The index is a proxy for overall market sentiment and economic expectations, and hence, it's a lot easier to analyze as compared to individual stocks. Do iron condor trades really work over long-term market fluctuation? iLearniTrade has been trading them as a company in the public eye for the last 2 years. They started in the middle of 2010 and made about a 6% return in as many months that year. 2011 was a completely different story. The markets had huge fluctuations and settled to close the year marginally down. Through all this, iLearniTrade racked up a gain in excess of 20%. Now, they are not saying that they magically make money every month, but with set rules and the discipline to follow them, they made the money back they lost in losing months just as quickly. They have now started 2012 on a good note and are already up 7%, while the markets may not be doing better for now. But that is the beauty of the iron condor. Their target is to continue to consistently make 15 to 20% every year, regardless of what the market does. But now you're probably thinking that this looks complicated. It's not for me. But actually, it's far from complicated. Once understood, the iron condor takes only a few minutes a day to trade. In fact, you need not even look at the market during trading hours. You can enter your trades into the system whenever you have the time. It's definitely not rocket science. People from all walks of life have learned it, and they love it. Individuals who thought they were great stock pickers and could consistently buy low and sell high saw how much easier it is to trade the iron condor. Those who never thought of investing in the past enjoy the returns today. Young students, people with full-time jobs, and even stay-at-home moms all have become expert traders in a few short weeks. Now, I can see that I've whet your appetite, and you're keen about exploring what this is all about. iLearniTrade is here to teach you how. All you do is go to www.ilearnitrade.com and click the Get Started button. Fill out the registration form, and you're on your way. How does this program work? It starts with 9 live interactive webinars for 2 hours each, held once a week. This is their unique approach of spaced repetition. Think of it as wanting to learn to play the piano. Would you be better off having 1 lesson and practicing for 30 minutes every day, or cram 5 lessons in 3 hours on every Sunday? To make sure that concepts are absorbed properly, they'll be sending you homework assignments so that you can practice what you've learned in class. You can do so using paper money. You don't risk your hard-earned savings while you're in learning mode, but you get a feel for how options behave in the live market. The program also includes one-on-one coaching to clear out any lingering doubts and build your confidence until you're ready to face the market on your own. They know with a 9-week-long program, some life events can lead to missing a class, even if you don't want to. Don't worry, it's not a problem. A recorded version of each class is always available on the website. You can listen to it any time in the week and catch up. Their instructors will be available 30 minutes prior to the start of the next class to clear out any questions that you may have from the catch-up video. And of course, you can correspond with them by email anytime. Once you have graduated from the foundation course, you will start using your education. You will start trading the Iron Condor first in paper money, and then you decide when you want to switch to live trades. Many of their students simply replicate the trades that they execute in their account as they send out emails with their trades one day in advance. Those who would like to just mirror the trades and not carry out any trades on their own can sign up for iLearniTrade. This sets their account to automatically copy their trades in their account without them having to even log in. You too can sign up for iLearniTrade right now and automatically replicate iLearniTrade gains. But they also want you to completely understand the trades that are making you money. After mastering the Iron Condor, you'll be able to and ready to learn more option strategies and refine your skills further by taking their advanced courses. This is a comprehensive course, and you'll get a lot. But you're probably wondering, what's this going to cost to learn all this stuff? Well, unlike other education companies, they don't charge 4- and 5-figure fees to teach you how to make good returns. They want to be your partner, not a predator. Their premium membership that gives you unlimited education is just $139 a month. As long as you're a member, you can take any class as many times as you want. But as a special thanks for taking the time to listen today, they would like to offer the first month of membership for only $9.95. And this month starts only on the day on which you attend your first class, not the day you sign up. What this means is you get to attend the first 4 of the 9 seminars for just $9.95. In these 4 classes, you'll learn how to read stock charts, how to perform technical analysis. You'll learn all there is to know about options, and even go through practical coaching on how option trades behave in the live market. At the end of these 4 weeks, if you feel you don't want to go on, simply cancel your membership, no questions asked. So what's the catch? Well, there is none. They are so sure that you will love their education and teaching style, they want you to discover it for yourself without having to make a big commitment. Now come and learn the new and easy techniques to make money and improve your financial health. This will be the best $10 you will have ever spent. They guarantee it. Now go right now to iLearniTrade.com. That's iLearniTrade.com and sign up today. Their instructors are waiting